This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Now we're going to look at the question Newman, question 2 from the December 2010 examination. I think it's a nice question. It deals here with the work on social and environmental auditing. But because social and environmental auditing is non-standard, it's not like the audit of financial statements, some of what we can say here, particularly about maybe accepting the work and finding out if it's okay to accept the work and so on, is of some wide application to any work which is not of a standard audit. In general, it is, what is the work? Do we have the expertise? Do we have the time? And so on. Is it going to raise any legal or ethical problems to do it? Anyway, let's first of all look at the requirements which we've got in here. And the requirements are: identify and explain the matters that should be considered in evaluating the invitation to perform an assurance engagement on the sustainability report of Eastwood & Co. So it's an assurance engagement. We're going to be asked to give our opinion. It doesn't say whether it's going to be positive or negative opinion, but nevertheless we are giving an opinion. Recommend procedures that could be used to verify the following draft KPIs: number of serious accidents in the workplace, average annual spend on training per employee. And finally, you have a trainee accountant assigned to you. Read the notes, unsure about the implications of the charitable donations being disclosed as a different figure in the financial statements compared with the other information published in the annual report, presumably in the director's report or the chairman's statement. Prepare briefing notes to be used in discussion with the trainee accountant, where you explain the responsibility of the auditor in relation to other information, and recommend the action that should be taken by Newman & Co. if the figure relating to charitable donations in the other information is not amended. Okay, so the first thing we are asked to be doing here is to explain the other matters that should be considered in evaluating the invitation to perform an assurance. But anyway, keep that in mind, and we'll work through that first as we go through and just think about other relevant stuff that might be brought into part A. This is before we really take the job on. Remember, this is saying here, evaluating the invitation to perform an assurance. And we might well conclude that we don't want to do it. So, reading through here, I'm a manager of Newman & Co., a global firm of chartered certified accountants, responsible for evaluating proposed engagements and for recommending a team of partners to a team of partners whether or not the engagement should be accepted or not. Okay, so we might come down on the negative side here and say, just don't touch it, it's just too horrendous. Eastwood & Co. is a listed company, and that's important. It's important to know it's listed because really the standards of ethics and to some extent the standards in other audit care is, for example, in setting materiality perhaps, is raised a little bit for listed companies. Listed companies are one type of company, a public interest company, where many people are going to be involved, many stakeholders are there, all of these loads and loads of shareholders internationally now. And if we do something wrong, to be very selfish about it, if we do something wrong, it's very bad news for us. Of course, if we, the auditors, do something wrong, it will be very bad news for an awful lot of the stakeholders. It's an existing audit client, and that's quite good news. It would have been a new audit client, or not really an audit client, but a a completely new company coming to us for this sustainability report, then we might potentially get a little bit nervous in some cases. Why have they come to us, the strangers, rather than going to the ordinary auditors? So at least we know them. At least we know what they do. We know to some extent the type of people they are and the sort of internal controls. So we'll have some feel for the kind of environment, the controlled environment, the culture in which they operate. International mail services operator with a global network, including 220 countries and 300,000 employees. So this company is just huge. It's in nearly every country in the world. There's 300,000 employees, and immediately we should not quite see warning bells, but see risk, which I suppose warning bells. But they've all got maybe different jurisdictions, and maybe all got different reporting standards, different kind of ethical standards, and so on. And here we are, trying to come out with some sort of report for the sustainability report and put our name to that, when there are people from all over the place with different standards, maybe different ways of measuring, and actually, frankly, maybe different levels of care about how important these sustainability reports are. The company offers mail and freight to individual and corporate customers, as well as storage and logistical services. I can't think it tells us very much, but we'll lock it away. It takes its corporate social responsibility seriously and publishes social and environmental key performance indicators in a sustainability report, which is published with the financial statements in the annual report. Partly in response to requests from shareholders and pressure groups, they've decided that in the forthcoming annual report, the KPIs should be accompanied by an independent assurance report, and approach should be made to your firm to provide this report. To help with your evaluation of the potential engagement, you've been given the following extract from the draft sustainability report, containing some of the KPIs published. There are 25 environmental KPIs and, goodness me, 50 social KPIs. So not only is the company big, all of these KPIs are huge. I don't know, I could even think up 50 social KPIs if I was very well paid to do it. Anyway, extract from the sustainability report, and you see going down this that everything's better. CO2 emissions have gone down, energy use has gone down, charitable donations have gone up, number of serious accidents has gone down, average spend on training has gone up. So it's a pretty rosy sustainability report, and we should maybe just think of professional skepticism a little bit. Can they be improving everything, all of these measures, if you like? Maybe they can, but I think it's fair to begin to have a little bit of a doubt. Have some of them been massaged a little bit. You've also had a meeting with Ali Monroe, the manager responsible for the audit of Eastwood & Co., and the notes of this meeting are given below. Notes with the audit manager. We've been in there for 3 years. It's a major audit client. It's listed on 2 major stock exchanges. The audit is managed from our office in Old Town, which is a global headquarters. And that makes kind of sense, I suppose. We've not done any work on the KPIs, so this is completely, other than review them for consistency, this is very much a new venture for us. They're produced by the Sustainability Department, which is located in Fartown. I would never been there. So these statistics are coming from part of the organisation that we frankly know nothing about. We don't know anything about their competence. We don't know anything about what sort of ethical background or rules that they operate under, and so on. We don't know anything about the perhaps managerial pressure which is brought to bear on these people to perhaps massage results. Now we'll have to go back at some stage to see whether we think these doubts are relevant to the question. I think in some of these you have to throw the net widely, and then afterwards you say, well, actually that's an interesting point, but it's not really relevant to answering the question. So we're going through this, we're kind of being as proactive as we can, saying, why have we been told this? What might the implications be? We've performed audit procedures in the charitable donations. Well, we would have, because that's the one measure here which is going to be in the financial statements. This is disclosed in a note to the financial statements. But our evidence indicates that there have been donations of 9 million. However, the draft KPI is showing 10.5 million, and this is what's emphasised in the chairman's draft statement. And 9 million is material. The audit work's nearly complete, and the annual report is to be published in 4 weeks, in time for the company meeting at the end of January. Your company has recently established a sustainability reporting assurance team in Old Town. That's the town where the head office is. And if the engagement to report on the sustainability report is accepted, it will be performed by members of the team who would not be involved by the audit. And that's potentially important. It kind of becomes important. It kind of starts off being important, but then always becomes unimportant. I think if you're dealing with team members not involved with the audit, that's kind of important if you have a self-review threat. But frankly speaking, if you have the auditors who are predominantly auditing the financial statements, the finance, and you have your sustainability reporting assurance team who, apart from maybe charitable donations, are reporting on something completely different like carbon dioxide emissions, the chance of having self-review happening is actually quite low. So it's a bit of a damp squib, really. It sounds good, but in fact it's nearly irrelevant, apart maybe from the charitable donations. So let's think here about identifying and explain the matters that should be considered in evaluating the invitation to tender to provide this assurance information. So what we need to think about is the legality and the ethics predominantly, and I suppose at some point whether it's going to be profitable. So let's think about the ethics, and we can go through the ethics, we can go through the attacks on the ethics, which we have to, the threats, if you like, which we have to look at. So we've got independence, we've got integrity. I can't see any reason why that's going to be maybe so. Got integrity. How could integrity be threatened? Well, integrity can be threatened by, say, self-interest. This is a major client of ours. It's a listed company. We are undoubtedly going to get extra fees for this. So one of the things we need to look at is whether or not the total fees coming from this client are going to push us above the threshold that is set out by the Code of Ethics for dealing with listed companies. Is it going to push us above 15%? And if so, we shouldn't really be doing it. I'm kind of assuming that the other threats to ethics, like familiarity and self-review, aren't going to be very important here. If we're already doing the audit, we've presumably satisfied ourselves that the familiarity threat isn't there very much. We've already kind of argued that, maybe apart from charitable donations, there isn't going to be much overlap between what the audit team does and what this sustainability team does. So I don't think we're going to have any particular self-review threats there. There's no hint that we're going to have any sort of intimidation threats there either. However, we have to worry, I think, about competence and due care. Okay, we have this specialist unit set up now which presumably employs people who have at least some specialization, some training in evaluating and auditing, if you like, these KPIs. We need to check that. My big worry, however, is just the size of the extra work. When you see the companies operating in 220 countries, 300,000 employees, any one of which might have had a serious accident. When we see just the number of KPIs they have on the social side, the 50 of them there is an awful lot of work there. And I do think we have to worry about whether or not we have the competence and the due care bit properly nailed down. We also should worry about the legality, because there are some countries, remember this is operating internationally, there are some countries where the auditor is not allowed to offer other services. For example, in America, auditors can only do auditing. They're not allowed to do sort of consultancy work or tax work, anything else. This is to keep them just focusing on the audit, and they're not enticed to do a soft audit for the purpose of getting other work. So we need to worry about the ethics. We need to worry about the legality of doing this. Anything else that we perhaps need to worry about? Well, do we have the staff? Kind of gets on to the enormous size of this company. Can we slot in this job okay? We need to know, I think, how they do their measurements. Let's just make sure that that's not covered somewhere else. Not really. When we look here at these figures, when we look at the carbon dioxide emissions, when we look at energy use, when we look at charitable donations, that's the easy one. We look at the a number of serious accidents. Let's look at that one. What do they mean by serious accidents? Has the adjective serious, if you like, been defined in the 220 countries in which they operate? And if they were to change the definition of serious, then of course that might explain the decrease in the number of serious accidents. How do they record these? How do they record any of this, in fact, to make sure that the raw information we're dealing with is something we can have confidence in? And if we are unclear, maybe about how they, in these 220 countries, consistently record the incident of serious accidents, or energy use, or CO2 emissions, or the average annual spend on training per employee, then we are really laying ourselves open to problems. We must understand how they're doing the measurement before we can audit the measurement. And if they can't tell us straightforwardly that this is consistent, that it is maybe widely accepted, how you measure CO2 emissions and so on, then we're going to have great difficulty. Average annual spend on training per employee, for example, is it what they simply spend on external trainers, lecturers, teachers coming to train them? Or are they taking into account maybe the cost of that person's salary for that day? Which would boost it, of course, it would flatter it. But again, we need to be wary about this. If we can't be satisfied about how they measure it and the kind of consistency in which they're doing that, then maybe we should be turning the work down. And remember, there are 50 things we're going to be setting our name to in the social KPIs and 25 in the environmental. There's an awful lot of detail to be looking at there. We need to think of the timetable. We need to think whether these 220 countries are going to cooperate with us. We need to think how we're going to go and find data, raw data from these countries. How are we going to audit in, let's say, Australia, that the Australian subsidiary is supplying this right data, and all of it is going to this far town, I think it was, place, where they collate all of this data, and we've never even visited there. Is the fee going to pay us to go there to actually do the audit and so on? And what is the fee? Is this going to be a profitable enterprise? And again, I would come back and say, if it's going to be profitable and it's very big, is it going to be boosting our fees to above the allowable fee, which is regarded as staying within the bounds of not having too much self-interest? That's the sort of stuff I'll be thinking about in looking at part A. 12 marks, 25-ish minutes, something of that sort. We've probably got there okay. Recommended procedures that could be used to verify the following. 6 marks, there's 2 KPIs, that's 3 marks each. You're not going to be expecting to do a lot here. Number of serious accidents in the workplace. I would come back and say, well, how do you define them? I would come back and say, could I see the accident book? I could say, could I see your insurance claims? I could say, could I see the board minutes? Because we would hope that serious accidents are noted down there. Could I see correspondence with lawyers? Maybe could I interview trade union representatives? Because almost certainly trade union or employee representatives have been helping employees who were injured to maybe recover compensation. I might be looking at the normal ledger account where we maybe put through payments for compensation to our employees who have been hurt in some way, and also looking at the insurance income against that, where insurance companies are compensating us for payments we've had to make. Average annual training on spend on training per employee. Well, what is the average spend? It is total expenditure over a number of employees. So how do we work out the number of employees? What is meant by average number of employees? And I would want to go and see some sort of list maybe of employees at the beginning of the year, that's at the end of the year. And one way of working out the average is just to add them up and divide by 2. How do they code average? How do they code expenditure on trainees, on training? And if there was a training normal ledger account, I would want to go to that. I would want to trace back, I think, to invoices to make sure that they're only putting in training invoices. If they added people's wages in there, because it's a day spent on training, it's therefore your wages spent on training. So they're going to be doing that. I'd be interested in making sure that they're putting people in at the right kind of wage rate. I'd be recalculating everything. So those are the sort of procedures that could be used to verify the following. There may be more. Undoubtedly, we've got more in the printed answer. And then we have this business where other information is inconsistent with information in financial statements. Now, you may be looking at this example before in our lectures you have covered audit reports, but you may remember it from the lower auditing paper. And this is when, if the other information, which is not part of the financial statements, so we're not auditing it as such, nor are we expressing an opinion on this other information, so we can't modify our audit opinion if the other information is wrong. What we have to do, if we are sure it's wrong, is to put a paragraph in the audit report saying, more or less, by the way, you've been told in the chairman's report that the annual training is this. However, in the financial statements, we think it is this. So we're not modifying our opinion on the financial statements, but we are drawing people's attention to it. However, I think it would be wise for us, and part of our responsibilities, that if the company is saying in here that the expenditure on training is 10.5 and we think it's 9, there is the possibility, of course, that the financial statements are wrong, that the 10.5 is right and something has been overlooked in compiling the 9 which has gone into the financial statements. I think really, as a matter of prudence and humility, really, we ought to make sure that the financial statement figure of 9 is actually right, and we want to go back and kind of re-verify that, I think. What's going to happen if the figure relating to charitable donations is not amended? I think the figure, I think it said somewhere, is probably material, or as we can work out, it is material. What we're going to be doing is we're going to be essentially making this extra paragraph in the audit report, pointing this out. It goes a little bit further than that. If we tell the directors, look, the figure you are boasting about in your sustainability report is too high, and they more or less say, yes it is, but we're not changing it, then we should begin to worry about the integrity of management. I mean, what does it really mean if you tell the directors this figure is wrong, and they say, yes, we know it is, and we're quite happy for this incorrect figure to be nevertheless published in our chairman's statement or whatever it is. Where else are they quite happy with providing incorrect information? And in particular, where else might they be quite happy with providing you, the auditor, with this incorrect information? And we are maybe heading towards a situation where our belief in the integrity of management has been undermined. We might be thinking of whether or not we want to continue our relationship with this company, and we might be thinking of potentially resigning from it.